All right, today more for multifamily, right? We're going to talk about what capital stack is in real estate. So again, this is going to be educational base level, quick overview. But this is for your larger deals, 10 million to 100 million type deal, mostly where you'll see capital stacks get put in place in real estate. And basically it all comes down to understanding these capital stacks sometimes can either make or break your investment strategy when you find these larger opportunities. So a capital stack is simply like layers of funding that's made up to put a real estate deal together, right? So think of it like a cake. This cake has layers to it, and each layer in this capital stack strategy represents a different source of funds, right? Money, where it came from. Each level, though, has its own risk, reward, and everybody's paid different. So priority also takes effect on how people get paid in what order. At the top, you've got your equity investors. They're the ones that come in with you from the beginning. They put up the funds, kind of get it going. They've got the most risk, but they also potentially get the biggest potential returns as well. Then kind of below that, you get into what's called preferred equity. Still risky, a little bit more payment priority. And then from there, you can even get into what we call mezzanine debt. It's kind of like a hybrid between you get equity and a loan. And then at the bottom, what brings these deals together is what we usually refer to as like your senior debt, which is usually from like a bank, a lender like us. This is where we kind of come in and specialize, and we'll bring in whatever 70, 80% of some of these deals. Senior debt is kind of like the safest part of the loan that comes through. We're going to have underwriting, you're going to have to qualify, all the boxes are going to have to be checked, the I's dotted, the T's crossed. And it's also the one that gets paid first. But the returns are smaller. So, knowing what a capital stack is can help you figure out where you want to invest in some of these deals. If you're an investor and people are pitching you, higher in the stack means higher potential returns, but also more risk. I think we all know that. The lower in the stack you kind of go, you get a little more security, smaller profits. As an investor, next time you look at a deal, just ask yourself, where do I fit in this stack? That answer can help, shape like your decision making in it. And if you're a developer or a builder or contractor out there and you're looking to put together capital, know these levels, because the guys you're asking to invest in your projects, they're going to know. And if you don't understand it,